Apple shares slightly lower right now in overtime after reporting earnings. Joining us now is CNBC contributor and Hightower chief investment strategist Stephanie Link. She's back. And Annandale Capital founder George Seay. Both are shareholders in the company. Stephanie, I'll start with you. There was a lot. There's a lot to like, and there's stuff to take issue with in this report, but there is a lot to choose from.
Right. So the quarter was kind of in line at the headline, right, in terms of a little bit better on earnings, revenues as expected, down 1%. You highlighted iPhones kind of in line, although I think that there were some expectations that they could do a 5 to 7% growth number. Looks like it was a 3% number. So not terrible, but I think expectations were a little bit higher. Services obviously is going to be the bright spot for sure. The whisper number was 13%, so we got 15%. Clearly positive. I don't know what's going on with Mac. We'll have to dig into that. That's problematic. China does not surprise me at all, because that's one of the things that we've all been worried about. Huawei, competition, right? And then also the geopolitical issues. So we have to get more color commentary there. This really is going to come down to guidance for the December quarter. And it's going to be because there are some expectations out there that you're going to see them or hear them say they can get to a 3 to 4% top line number for total revenues from -1 this past quarter. If they do that, I think the market can rally. If they don't, same old, you have a stock that's trading at 29 times for what are you getting, right? And when I compare in your world, John, Amazon and Alphabet and Meta, they're putting up double-digit growth with operating margin expansion. So you can see why the stock is kind of languishing a little bit. I don't think this is terrible by any means, but I can poke some holes for sure.
George, you're a longtime shareholder in Apple. Your thoughts on this quarter, and just I'll dig into the Mac piece of it specifically, because it was a large miss, but we did just get those comments from Steve Kovac, from Tim Cook as well, that M3 chip Mac event earlier this week. It sounds like there's a potential for that division to charge up or re-accelerate in the current quarter.
Well, Morgan, Mr. Sandman, take me away. This was a real yawner of a quarter. It's not very interesting at all. And we talked about Macs, but Macs are kind of a rounding error for this company at this point. And if you're going to continue to pay a 50 to 70% premium multiple on this company versus the market, it's all about services. Services is the growth driver and the margin driver, and where the future of the company is in terms of getting a premium multiple. So that's the number to keep a close eye on going forward, and it grew very nicely this quarter. So I was really happy to see that. But this is a yawner. It's not going to move the stock significantly either direction unless their guidance is really, really disturbing to the street and to shareholders, and we'll see.
George has got a point, Stephanie. At the same time, Apple just hiked the subscription price for Apple TV Plus, I believe, from to near $10 from somewhere around $5. So maybe they're feeling like that's going to help in the near term on the revenue side, since the customer is so loyal. Vision Pro in an economy that's slowing, they weren't going to sell that many of those anyway, so that's not going to move the top line needle. Does it come down to how many iPhones can they build? We heard from Steve Kovac. Tim Cook told him they're supply constrained on the high end. And markets outside the U.S., does China sort of turn around for them after this flirtation with Huawei?
See, so I actually think the consumer in China is stronger than expected. And we saw Starbucks as a perfect example today, not Estee Lauder. That's a company-specific issue. We saw better results from the Chinese consumer in gaming, Las Vegas Sands. We see the better consumer in Nike, in China. So I think the consumer actually is going to come around. We do have competition from Huawei. That's what I mentioned. However, I still think people want to own the iPhone, and I think that's going to recover as the Chinese consumer recovers. So I feel a little bit more bullish on that. On the other hand, if they're increasing their subscription pricing, that obviously think they can. And that's going to help margins. If they can sell more pros, that's going to help margins. Services clearly is the margin driver. So that's why they're able to put up 44 to 45% gross margins, though, right? So that's a big part of the story. I just think you do need the iPhone numbers to accelerate, and that's why it's going to matter what they talk about in terms of the December quarter guidance, because that's what's going to drive the revenue numbers.
So, George, with these numbers threatening to put you to sleep from Apple, do you wake up and buy some more here? Do you sell some and buy one of these smaller cap stocks in the Russell that's, trying to rally lately today after being so down this year?
Yeah, this is a hold forever stock, and you trim or add on the margins depending on valuation. And we sold about 30% of our position in 2021, and then we bought back about half that much in 2022. And I'm completely sitting on my hands right now. There's just not enough here to get excited about. But if it takes a big dive at some point in the next 6 to 9 months, we'll add some more. So, but you've got to have compelling price at this point because this is such a Leviathan company. It's so big and it's so well reflective of the U.S. market and the global market as well. So you can choose to be picky in terms of when you buy and when you sell. And it's up so much this year, I don't think you want to chase it with the kind of numbers they're putting out there.